we're here to talk to you about divorcing and separating when you are serving or have served in the military. And because it is different, there are a lot of things that apply to military retirement funds that don't apply to regular retirement funds. And VA loans are very different than regular loans. So I will just start by telling you a little bit of divorce and custody stuff, and then we will move right into the more military related things. So I'm Christie Thompson with Christie Legal. Again, I apologize for the nonsense here. I think Zoom has changed things yet again. And this is the first Facebook Live event I've done for, I think, 6 months. So, obviously when you're divorcing, you need to divide the assets, and the rule of law in Minnesota is that you divide those 50-50. And that doesn't mean that you take each asset and you divide it in half. It means that you add up all the assets and each party ends up with about 50% of the total asset value. And you could do that in many, many ways. When we work together, we decide what the priorities are for each of you, and then we work backwards from there. And so if one of you wants to keep the house, we see how much equity is in the home, and you may end up having to, refi the house mortgage and give some of that equity to your soon-to-be ex-spouse. But if you want to stay in the house, we'll try to get you to stay in the house. But of course, you will need to find out if you qualify for a mortgage, and we're going to have a mortgage banker explain that to you shortly. And so whatever your priority is, we're going to try to have you keep that asset or assets. And then we also, during divorce, need to divide the debts. That's probably even less fun than dividing the assets. And debts are divided by ability to pay. And what the legal term ability to pay really means is whoever has more money pays more debts. And it doesn't matter who created these debts because you folks are married. So financially, you are one person. Yay. So say if you guys have a total of $50,000 in debts, and this is not inclusive of the mortgage, and you make the same exact amount of money, then each of you is going to be walking away with $25,000 of debt. But if you have $50,000 of debt and one of you earns nothing, then the person who earns the income will be walking away with all of that $50,000 of debt. That's negotiable, but it needs to be right around, again, based on the ability to pay. In order for the divorce to happen. And then there, of course, is the sharing of the children. There are the best interests of the child standards that we'll talk about. And there are 13 of them, and they're fairly complicated, so I'm not going to get into that. And we're going to also factor in things like, who has been taking care of the child most of the time? Are there any special needs? And does each parent know how to handle those special needs? How much does each parent work? Do both parents have the ability to be available for the children after school every day, or just some of the days? Does one of the parents do a lot of out-of-state travel? So those are all the things that we'll figure out and talk about. And so those are the main things when you're divorcing: dividing the assets, dividing the debts, and sharing the children. And so now we were talking about that one of your largest assets is probably your house. And when you divorce, you're probably going to need to refinance that mortgage, unless the other person wants to continue to be on that mortgage and not be able to buy another house. So Dave, please tell us about mortgages in general, and then mortgages when you served in the military. Thanks.
All right. Well, my name is Dave Jamison, and I'm with Rainbow Mortgage, and we are a divorce and mortgage specialist along with a certified VA loan specialist. And this is new to our team. We are licensed in Minnesota, North Dakota, Florida, and Wisconsin now. So if we have any viewers that are out of Minnesota now, we can help you in any of those states. So we added those states to our offerings to our clients. And probably the biggest thing that people need to think about, like Christie said, is the division of the assets when you're going through a divorce and how that's going to play out and how it affects your debt to income ratio. So if you're going to keep the house and you're not going to refinance, it's not that big a deal. If you're a veteran and your spouse is going to stay in the house, there does become some issues if you try and get another VA loan, because you have a finite amount of entitlement through the VA. And if your spouse keeps the first house and then you're going to try and buy another house, you may or may not be eligible for the 100% financing. You may have to put some down payment down. It just depends on how much of that entitlement you used on your first loan. If you're staying in the home, obviously that's easier. However, your spouse will still stay on the note if you don't refinance them. Now, one of the things that we talk about a lot with our clients is it's not a program, but it's a term that's called contingent liability. And what that means is that if somebody is responsible for making the payment on a house, a car, or something like that, and it specifically states that in a divorce decree, that doesn't necessarily mean then that we have to refinance that house out of the other person's name because we have a divorce decree that says, let's just say I'm getting a divorce and I'm going to keep the house. My wife wouldn't necessarily need to require me to refinance to get her name off to qualify for another house because the divorce decree specifically states that I'm going to be responsible. Now, you need to really be careful if you're going through a divorce and you opt for that option, because let's say I don't pay my mortgage for a few months. That's going to affect my ex-spouse, because if I didn't refinance, her name is still on the note and she is now going to have a couple delinquencies on her credit. And what the rules say about that, just so everybody knows, is that if the divorce had already happened and those lates show up on my credit after the divorce has finalized, the lenders, so, the lenders, the people that we work with, would not have to count that debt against you. The caveat to that, though, is that the credit bureau will still count them. So your score will go down because technically the divorce decree is after the contract date with the original mortgage. So the credit bureau is not required to remove those lates from your credit, because even though the divorce decree says it's my responsibility, it can still be they could still literally come after my ex-spouse if I didn't pay. Now, they would, obviously, Christie would go back to court and say, Dave is, he violated the order and you need to fix this and all of that fun stuff. So I'm very careful about making sure that my clients are, if they, rates are going to start going up. So we're going to start seeing a lot more people are going to opt to stay on loans with 2% interest rates as opposed to refinancing them. They're just going to have to be super, super careful and have some safeguards in place as they go through the divorce. So that's just a little bit, that's just a taste. If you are going through divorce and you have questions, certainly give us a call. Looks like Christie has a question, so we'll let her fire one up here real quick.
Dave, how often does that happen that even though the court documents state that, this, house and the mortgage is somebody else's responsibility, how often does the other person still get dinged? Is it like every time that, that the other person doesn't pay the mortgage payment that happens, or?
Yeah, every single time. Yep. So every time that they're more than 30 days late, it can affect that other person's credit. So usually what I recommend that they put into the divorce decree is that the other party has to provide proof of payment every month. And then if they don't, the other person has the option to quick make that payment, but then you come back to you or the attorneys. And now a lot of the decrees that I work with and help people with, I advise my attorneys and clients to have language that says, if you're 1 times late, then the house is going on the market the next month because you can obviously not afford it. And we can't take a chance that the credit is going to go down the tubes for both people because one party is not able to manage their finances or whatever. People lose jobs, as we also saw in the last 18 months. Bad things happen to good people, no fault of their own. So, but we do need to protect the people that are staying on the loans. And I think we're going to see a lot more of these questions coming up. I've got a 2.5% interest rate. I don't want to get rid of that. How can I keep that interest rate? Well, how comfortable are you that the other person's going to continue to make the payments? So
Thanks very much. Yeah, I have seen judgment and decrees that say 1 or 2 late payments, boom, we're selling this baby.
Yeah, and I wouldn't wait for 2 because then the other, a 60-day late will totally impair the other person's ability to purchase a home for at least 12 months. We can get around a one-time 30-day late on a mortgage, but a one-time 60, that's 12 months minimum for all programs. And VA, this is something, even though I'm a specialist, I continue to learn. VA only allows 1 30-day late on any account, credit card, car loan, home loan in the last 12 months, or they won't do the loan. So you want to make sure you're protecting that credit, especially when you're going through divorce. So again, Christie will have all the contact information at the end for us. So if you are watching this and you're going through a divorce and whether you're a veteran or not, and you have questions, certainly give me a call. We are one of the top specialists in divorce and mortgage around. So give us a call. We'll answer your questions. And if you like us, we'll help. We'll keep helping you. If not, you can find somebody else.
Nobody doesn't like Dave. That was such valuable information. I had never heard, 30 days, 60 days. You can't get a mortgage for, an entire year was 60 days late, and that the VA loans, I assumed they were stricter, but I didn't know, the exact strictness. Can you just tell us a little bit more about the VA loan?
So the VA loan for purchases, veterans are able to purchase homes potentially up to 100% of the value. There is a funding fee that is tacked onto that 100%. So it just depends on your military service and if it's a first time use or second time use. Anybody who served recently, most of the veterans that I've seen that have served in any of the Gulf Wars or Afghanistan, Iraq, any of that, the majority of the people coming back from those tours have some sort of disability or exemption. So a lot of people aren't paying the funding fee on those. So that's pretty nice. The biggest benefit of the VA loan is the fact that you can buy a home with zero money out of your pocket. The refinances are a little bit trickier. Sometimes you can go up to 100% of the value. Other times we're capped at 90. But when you're doing a rate and term refinance, you're not taking any cash out. You can always go up to the program limits. And right now there is really no limit on VA loans. We can actually, if you're not going through a divorce, or you are, but you want to buy $1 million house, we can do $1 million VA loans and potentially get 100% financing on those. Most times those high ones, they require about 10% down though. Once we get over about 500,000-600,000, we start to end up with about an 8 to 9% down payment that's required on those. There's a calculator that we have to use to figure that exactly out.
Wow, that's actually great, David, because then, thinking about what Cathy is going to talk about, you could get like a really low interest rate on your home and then, put your money to work in the stock market or put it in your retirement fund or whatnot, right?
Well, and we'll let Cathy go in a second after she unmutes. One of the biggest things that I try and talk to people about is, with rates being so low, why would you raid your 401k or your investment account to pay off your ex-spouse if you can take out a loan at 3% or 3.25%? It makes no sense to go take 50, 60,000 because, if you're younger, in your 30s or even your 40s, and then you amortize that 30 or 40,000 out for the next 20. The 3.25% is a way better deal, I would guess. Wouldn't you say, Kathy?
Exactly. Yep. I actually just did one of those. The lady asked me, well, why am I taking a mortgage? And that's exactly the reason. Because if you can make 14% in the market and pay 3% on a mortgage, you're only going to come out ahead.
This is a great time to transition over to Cathy. Cathy, first tell us a little bit about yourself, and then tell us about retiring when you were in the military.
Well, thank you, Christie, for hosting. My name is Cathy Hietala. I'm with the Terrio Group. We're a registered investment advisory firm through Motivate Investments. And I work with military people, work with people going through divorce. And I want to go over a few points that I think are very important, that if you're looking at getting a divorce or in the process of divorcing, that you should know. One is work with a financial planner or a financial advisor. And when you do so, do more than just ask them if they work with military people, because everybody's just going to say, yeah. Ask them specifically what the differences are between military and civilian, and let them give you some answers so that you know they know the differences, because the differences are vitally important. And this is your financial future. So it's important that you get it right. So let's start there. And one is knowing the military is big on acronyms. So the SMCRA, Service Members Civil Relief Act. And that gives you protections. If you're overseas or on active duty and your spouse files, that gives you more time. If you can't make it to court, they will extend that. So just know that you have rights through that act. And then the Uniformed Services Former Spouse Protection Act, the US FSPA, which is not a spa. But that one's important because it provides federal statutes for military. Usually when you divorce, you go by state statutes. This will provide you federal statutes, and some of them are important. And one says that it permits states to classify your retirement funds as property instead of income. That's important because it does not automatically entitle a former spouse to your retirement pay, where a lot of people think, oh, well, I'm going to get half the retirement pay, and that's not automatic according to that federal act. So what that means is one rule, for example, is called the 10-10 rule. That means you have to be married 10 years to each other. That's an important detail. And then during that 10 years of marriage or better, you have to have been active in the military for 10 years. So they have to happen simultaneously in order for that soon-to-be former spouse to qualify for that retirement pay. So it's not just an automatic. Maximum amount of pension a spouse can get, unless you voluntarily offer more, is 50%. So that's something else good to know. Then we look at the TSP, the Thrift Savings Plan. Now your spouse can be awarded a portion of that, but know that it does not go through what most people know as a quadro, a Qualified Domestic Relations Order. That's a civilian side. So if your ex-spouse comes to you and says, oh no, the quadro says I get your retirement. Well, they don't get your TSP. That's for your 401k or your IRA. Your TSP goes through what's called the RBCO, more acronyms. And what's important to know about those orders is those are the ones that tell you how that TSP retirement fund can be divided up. Now there's 3 different areas that a TSP can fall in. One is a civilian, one is uniformed, and one is beneficiary. And you can have all 3 forms of TSPs, but in order to divide them up, they need to be listed separately in that RBCO, excuse me. And one thing to know before any papers are filed for divorce is once they're filed, that TSP will be frozen. So that means you can't take out any withdrawals, any loans from that. So if that's something you need to get you through that divorce, which could last a year or 2 years, who knows, then you need to pre-plan for that. Now, if you're under, yep, David?
So Kathy, how long do disbursements take with these? Because I know with quadros, they can take 60, 90, 120 days.
They can take 60 days.
Okay.
Yep. And now if you do need money from those, we look at taking a loan, because if you're under 59 and a half, you can incur a 10% penalty plus your taxation on it. So it's not always recommended, but sometimes life happens and you need money. So we look at ways to get that. We want to do it before it's frozen. If you're over 59 and a half, then you have more options. But again, you want to hit it before that freeze. Now, it does allow you to pay money back. You have to continue to pay your loans back, even though it's frozen. You can still make contributions, which may or may not be recommended. So they'll take your money, but they won't give it to you. What else? Well, the beneficiaries, I think, is a important thing to look at. Make sure that you have on all your accounts beneficiaries updated. If you don't have a beneficiary on your TSP, it will automatically go to your spouse if you pass away until that divorce is finalized. Now, if your spouse is your beneficiary on there, even once you're divorced, even if your will says, I want it to go to my brother, it's still going to go to that ex-spouse if she's listed as beneficiary. So make sure and change and update those beneficiaries. And it's better to do it earlier than later. And it's done with a TSP3 form called Designation of Beneficiary. So that's something I tell people once a year, go in and check those life changes. So those are some of the highlights that I think are important when you're working with the divorce through a military process. There are several differerences and they get even deeper if you're disabled, but I wanted to highlight those. So
And there's several financial tools where your beneficiary designation overrules a will or a living trust, right?
Yes.
And
Yep.
what are those?
Beneficiaries are like, if there's a beneficiary on there, it's going to go to that person above others. Now you can take it to court and fight it. There's no law saying you can't take it to court, but chances are pretty good you're going to lose that battle. And that's why beneficiaries are so important. So you can leave either entitle your asset in the name of the trust or leave that asset the trust as a beneficiary of that asset. So that's a way to make sure that it gets into the trust. So, but you want to make sure that those beneficiaries are updated. Otherwise, they go through the lineage. If you're still married, even if you're in process of divorce, it will go to that spouse. Then it will go to your children, their children, and then that goes to parents. So there's a lineage, and then it goes on state level, whatever your state decides. So it's just easiest to file that form and get it done, the TSP3. Easy form. You can get it right on your military website.
Awesome. That's really great military specific information. Now, do you have any advice, not advice, but just information for people on how you can help them when they're in the divorce process?
Yeah, when you're in the divorce process, it's important to, you're going to have an idea of where your assets are and how you want them divided. So we can help work with you and your spouse, or, just you, and figure out different ways to divide those assets and that debt and say, okay, well, what are your goals beyond this point? Is your goal to get another house? Is your goal, to rent for a while, or because you're moving, you're in the military? So we're going to look at those goals and those financial budgets. We're going to create a budget for you moving forward. And then we're going to do different comparison reports to see, well, if we divide the assets this way, what does it look like with my future goals? If we divide it this way, what does it look like? And we're going to do comparisons so that you can really have a black and white and a secure understanding of how this divorce is really going to affect you financially. It's going to give you that moment, oh, I can do this, and hopefully that relief, knowing that moving forward, you're going to be okay. That's our goal, is to make that in black and white. So it's an easy picture for you to see and feel good moving forward, starting a new chapter of your life.
Exactly. That's everybody who is helping you through your divorce or your separation. That is exactly what our goal is to help it be less stressful. And you are going to then be more confident that, this is the right thing to do, and I'm prepared for this. And so, Cathy, how do you help people after they've divorced?
Well, once you've gone through the divorce process, we continue to work with you in your financial plan moving forward. Now we've separated everything. If there's an order in place to move any assets, we help you with those transfers, whether it's a quadro or an RBC out through military. We can help transfer those funds to make sure that they don't incur penalty. So it would be just direct transfer, because if you don't do it correctly, you can get that 10% penalty, you can get taxed on it, and there can be some significant challenges. So we help you through all that. Then moving forward, we make sure that you have your budget and looking at your future. What are your goals? Let's see, what you need to hit those goals and help you plan for that retirement that you dreamed of. And we continue to work with you yearly, to make sure that those are updated, because we all know that life just continues to change, especially if you're military. So we keep up on those. We're there for any questions. If you have any questions, you just email me, call me, and I'd love to help you. So
Awesome. Thanks so much, Cathy, for all of that information. Because honestly, the biggest part of divorce, even if you share children, sometimes the biggest part of divorce is the finances. Now we're gonna just rewind a little bit to talking about housing, because Ken Colston of Market Fare was not able to join us because he has a last minute deadline for trying to get somebody in a house. And but Ken is a veteran. He was in both the Army and the Marines. His last assignment was as a respiratory therapist, and he has been a real estate agent for at least a decade. I'm forgetting how many years, but at least a decade. And he lives here in the Twin Cities. And now he is selling houses. And the information that he wanted me to share with you folks about the market is that it has cooled down a little bit. So you're not having to, you're not having to pay as much over the list price as folks were having to pay even 2 months ago, even a month ago. So instead of, having to pay $30,000 to $50,000 over asking price, you're more like paying $0 to $30,000 over asking price, which is a really big deal. Because if you don't have money to put down, then you certainly can't put down, more than what the house is appraises at. And then he also said that there are not as many multiple offers, so you're not going to have as much competition right now. So honestly, right now is a great time to buy a house, because as David said, the mortgage interest rates are still low, and you're not having to deal with multiple offers and as much paying as much over the list price. So it's actually a good time, great time to buy. Let's see. So yeah. And so that's and again, Ken Colston, and his information is in the post for this video. So if you're looking to buy or sell a home, and you'd like to support a veteran, then please contact Ken. He lives in the Minneapolis area, but he works all over the Twin Cities. And So I don't see any questions in the chat. So that's all we would like to share with you today. But we all offer no cost initial consultations. So if you have any questions for any of us, please contact us via email, phone, or message, and we would love to help you. And although it was Veterans Day last Thursday, we're just going to say Happy Veterans Day to those of you who served in the military. I did not serve. I was just in a military family from ages 6 to 18. My adoptive father was in the Navy. So we really appreciate your service. And I hope that you have a great rest of this kind of gloomy day in Minnesota. Thanks very much, folks.